Hey team, thanks for your video. Let's start the breakdown. So this breakdown will have two parts. First part is a breakdown of your video and your test and pointing the areas of improvement. So of course I've heard your request, I've heard your confusion, and I have specific ideas how to make it better, okay? And then second part is something that I will ask you to do after your next backtest, and it is post backtesting analysis, okay? So I will have more details on everything I just said in this video. And I will also provide you a conclusion after this discussion so that you don't miss some things, okay? So there will be some like really important things, and then some small details which are still affecting the overall performance. So, and by the way, this is why it's important to try to keep the flow of work more stable, because then you will not miss these small details and you will not forget them. So, for example, if you remember some time ago when we discussed your initial backtesting and so on, I asked you to pick for your further backtesting something from majors, yeah, like EURUSD, GBP/USD, and so on. So I'm not telling that GBP/AUD is not tradable, but just look at this price action. You see how weak it is. It's a harder pair to trade, okay? It is more influenced by specific session times, and it has some details that needs to be taken into consideration. But overall, it tends to move. So these pairs, like these minors and exotics, they tend to move in this way. So they are ranging, and then pop. Then again, ranging. Maybe you're trying to get some trades, and then pop, or this. So they are a bit harder to trade, okay? So for your next trade, again, it's not a big problem, but since you are starting out, since you are working on simplified backtesting, you need to pick more better pairs like majors, okay? So for your next time, pick like EURUSD, GBP/USD, USD CAD, USD GPY, something from this. And now let's go through the video quickly. I will stop in some places, we'll comment, and then we'll make a conclusion, and then the second part that I mentioned. And by the way, before we start, just wanted to tell you, yeah, that this is exactly the way you actually is growing, yeah? So when you are recording this video and now we are analyzing it, this is the work. So you need to be confused before you grow, and I hope this video will help you. And this material that you recorded is a great foundation for working. It has a lot of interesting details that you can improve. So let's start. So this uptrend choice is okay, especially if you're trading with the 5 minutes, but also maybe for the next time I can show you some alternatives for trend choice. So let me show you. So you picked a price sections of this distance, something like this. But what I would recommend is maybe picking for the next one a bigger part, okay? So it's for your decision. Of course, the bigger chunk of price action you choose, the harder it will take. So this one is easier because it has like a squeezed bullish price action here. This one is harder because it has a lot back and forth, but you still can see the overall direction. And of course, ideally, you will pick something like this leg. So a big leg of down push, and then trade it only to the downside in your simplified backtesting move. Of course, you can go crazy and trade something like this, but actually there is no need because, there is only some time for simplified backtesting, and then it does not make any sense to continue. But in our case, it will make sense to continue in this format, maybe for one more time, and then the next level. And then the next level. So then you are doing your multi-time frame analysis, that's fine. But for this simplified backtesting, you actually can just skip it, Okay, you can just skip it because you know that you are just trading the uptrend, and that's all. So this is my first point, which is general. It's not as specific as you want, but I will give you specific moment, just specific points just in a moment. Okay, but this is also important. This is simplified backtesting. It literally means that you need to take this pattern, and basically this also, I mean, that's not a mistake. You can do a multi-time frame analysis, but just yeah, just do it in very general things and then focus on the patterns. And so at this point we are coming to some of my main points, and this point is about liquidity that is taken out, and some equal lows, equal highs, and how the market should behave based on this. So unfortunately I can't just say it in one sentence, so I will just pause at the places that you are mentioning it and then comment on it. So this is the first time in the video when I kind of understood why you are sometimes so confused with the market move. So you are saying this here, that we took some liquidity and now we need to see some break to the upside. Yeah, so of course maybe you are pairing it up with the fact that you know that the move will be up, but then later in the video I will pause you at some places when the market was moving up like crazy, and you had something like this and something like this, and then you say, okay, I will not trade it because I need to see some liquidity taken out, some equal lows to be taken out, something like that. So I will pause it later, and then you miss a trade. So is it okay to have this as a part of your trading plan? Yes, but it should not be in the priority. And then sometimes you say, okay, I don't see a liquidity taken out, yeah, in places like, so I will show you specific places where you tell it. But again, the market takes liquidity not in one push. Again, I will comment on it later, but right now, what we have is basically a market here that is moving down overall with this movement. And it's always better to prioritize structure, yeah? So you can work with inside structure, with fractal structure, but don't think too much about the liquidity, because you will, so this is the thing that confuses you, yeah? Because you will always have some move. So for example, when the market is moving up, you will always have some liquidity to be taken out. So now what? You are trading to here? No, because you know that the market is bullish. But if the market wants to turn here, you now are missing your moves because you are waiting for the liquidity being taken out. But the thing is that the market, when it moved here, it took this liquidity, this liquidity, this liquidity, and here on the move down, it made all the wicks and all the liquidity below. So don't think about taking liquidity in one obvious moves. When the market is undergoing accumulation and distribution, and in this case it's accumulation, of course, as we know, yeah, in hindsight, the orders are so big that it needs to absorb it in a long period of time. And so you need to see liquidity being created and being taken out in more more distant and more stretched way, and you can use it for overall context, but not for actually deciding where the market will go. So you have structure, supply and demand zones, and then confirmation as your main part of your trading plan. Okay, so so this is my intro to this point, yeah. And again, we are not, because of this move, we are actually not expecting the move to the upside. The market right now is having overall better structure plus really rangy structure. So what we can expect in the market condition like this is just continuation of accumulation, continuation of creation of these highs and lows, and for them to be taken out. Of course, we can make some attempts for early entries, and we can pair it all with high time frames. For instance, we can say that this is our high time frame zone, and now like after cycles of back and forth, So accumulation is actually up and down, up and down, up and down. And then after some move up, we can suppose that it is finished. Yeah. And one more problem with this accumulation and equal lows is that it makes people to think that they like really know what the market will now do, because they saw some move to the downside with this obvious liquidity grab or something like that. Yeah, but the fact is it's not that simple, and the market is mitigating and taking out liquidity in many forms. So below every candle, on every time frame at the same time. So it's not that easy, and it can be real confusing if you put it in the first place. Okay, let's move on. Yeah, so the way how you mark up the structure and look for clean impulsive moves, I really like it. Yeah, you made just 1 or 2 mistakes when defining the root of the move, but it's not that big of a problem. You said that it's confirming the uptrend, maybe, but maybe not. Yeah, I would not be so definitive here, because it's still, as you can see, it's just a range. Basically, it's really hard to tell what it's doing. If you have a high time frame bias, of course you have it. And if you think like me, for instance, that this is accumulation, and this can be a confirmation of this accumulation, then yes. But if we're talking about the uptrend on this specific time frame, then there is no uptrend here. Yeah, because for me, an uptrend would be something like this: initial moves to the upside, then reaccumulation, then confirmation, and maybe at this place I'm telling, okay, now we are standing in the uptrend, and now we can be even more bullish. So something like this. Let's not go into too much details, but it's just a small notice. Yeah, definitely you can refine to these zones, and then you want to tap and structure shifting up. Yeah, so this is all really nice. So here is a small detail that again, small details that they actually matter. So what we have here, as you can see, is a zone that was created by this candle and then immediately mitigated by this. And then it left this imbalance that was mitigated by this. So yes, even though we have an imbalance, for example, between this zone and this one, overall we can see that the chain was created in this way: down move, mitigation, up move, basically mitigation of this, and then mitigation of this. So here we can see the overall chain, and now we are breaking this chain to the downside. And so at this moment we can see, especially with so much momentum coming into the zone, we can see that maybe the market will go for this imbalance that actually was not mitigated by anything. Of course, and again, it's the problem. It's one problem with AUD is that it actually, you see, again, we can say that we have down move, up move, down move, and so all the chain is mitigated here. So that's why it's not so good even for refinement. Yeah. So on the first glance, it seems that it has these imbalances. Yes, and it has, but if we just take it a bit, the zones a bit bigger, then we don't have such clean zones anymore. But it does not mean, and I will include this in the second part of the video, yes, when we will have a post backtesting analysis, it does not mean that we can't use unmitigated zones, clean zones from the higher time frames. And by the way, let's check how it looks on 1 hour, because I forgot. Oh yeah, so it does not mean that we can't use this zone overall, but it just means, and this refinement is even good for this time frame, it just means that if you're looking at lower time frames, maybe you can add this detail that lower time frames actually did not leave anything too significant. Yeah, because again, we left this candle unmitigated, but as a zone, it's not good. The higher volume candle, this one, was already mitigated. So this is a small detail for the future. Right now, it's not so important. Yeah, so this is the second time where you've mentioned about the equals, the liquidity. Again, for the simplified backtesting, you can just forget completely about this concepts. Okay, you can just not use them, and I actually don't use them in my trading, and it makes it much more simple, because again, the market is not going here because it has equals. If you want, you can find equals everywhere in the market, okay? And the problem is that you will have them on the both sides of the market. And then how you will decide what the market will do? You have equals here and you have equals here. So what the market is doing? Probably this market will go to the downside. But why? Is it because of the equals? No. Maybe as a like 10th reason. But the main reason is that it has just structurally moving down. Yeah, it is mitigating the zones and creating new structures to the downside. So this is the main reason. And again, if you want to find liquidity grabs, equals, you will see them everywhere. But again, my question is why you are seeing some equals and then not seeing other equals? Yeah, I mean, why you are not seeing like these equals and not telling me exactly that it wants to go here? Yeah, so that's why always prioritize structure, and for your next backtest, really just don't use these concepts at all. And maybe for some time when you will be profitable without them, so you don't need them to actually trade, because the concept that we are trading, they already include them in a way. Yeah, because how the market is moving, it creates maybe some accumulation, some structure, some maybe minor pullbacks, and mitigates the zone. So what is this? These are some kind of equals. But do we need to count them and take them into consideration? Actually, no, they does not matter, because what matters is overall structure, overall model of accumulation or reaccumulation. And now all we know is that the market is moving up, and we waiting for these middle time frame shifts, and now we are moving with the market, and that's all. So you don't need them. They are confusing you. Yeah, so the price went lower because it's just going lower.
These lower zones, yeah.
Yeah, so this idea was really great. Yeah, everything was mitigating here. The price is just going lower, and this is actually the last zone from what I see on the 1 hour. Yeah, so this is the last possible zone to actually hold. Of course, given into consideration some possibility of absorption here, but overall this is the last zone, so we can start working from here. This another specific point that you will need to address in your next backtesting. So can you like show me or tell me from this screenshot what is the problem? Yeah, what is the problem with this trade? And if you watched my latest backtest, my post backtesting analysis and live trade recaps and things about accumulation and so on, so I talk about it many times. So again, try to understand what is the problem with this trade. Yeah, just pause my video and try to think. Okay. So my take here is that we are entering in the counter wave structure. Okay, counter wave structure, the market is moving against us. So because we know that the market is going or should react from this zone, yeah, so it has more probabilities to go up from here, let's say, especially in our backtesting, then maybe we can be more aggressive. But overall, what you know about accumulation and distribution and how the market behaves, yeah, we not only know that it likes to create this accumulation back and forth, and by the way, this is already a part of accumulation, okay, this is like the preparation. But we know that really often the market will just go here back and forth. So we don't see it here. What we see here is just a market that is basically moving down. So this is the main problem. The structure is against you, directly against you. So your first expectation in this kind of market is do this. Then your second expectation in this kind of market is do this. So you see, and here is your entry against all the zones. And so this takes me to the point that I also discussed in the videos, is that later entries are usually better entries. Why? Because you just wait out everything here, all this back and forth. And then when the price actually goes up, which you will see and you will mention it yourself later in the video, you will have much better entries. Why? Because the price already accumulated, it mitigated and take out any kind of high and low that should be manipulative. Yeah, and now it's moving up. And even better entry sometimes is waiting for the liquidation of this first move up and then enter even later. And again, you will see it in my latest videos, which I hope you saw, is that I have myself this kind of a habit. Yeah, I want to see an early entry, and then the price is just catching me. It's just catching me and takes me out. Again, this is a big point that will make a good progress for you. So yeah, why we are going even lower? Yeah, because we are just continuing basically the same thing what we are doing here. We mitigated the zone, and now we are moving lower. But you entered again this zone. You entered against this zone. So this entry is a little bit better. You have at least one shift, yeah, to the upside. But basically it's still, you see how the market is moving. It's just moving down. So we actually don't need to have these kind of early entries. You don't need them. You will save yourself to, really a lot of losses and a lot of unnecessary trades. So if you want to have a good rule, wait until the market will really present you with a good entries, with a bullish structure already. So does it look bullish to you? No, it looks like just an early entry.
Yeah, this works out.
And then what it created is a push up, reaccumulated here, and now moving even higher. And now I think when I saw your video for the first time, it will make even more movement back and forth. So this specific trade for me at this point, it will probably be a break even or even here, but I'm using pretty early break even, so it's just a small notice. So again, I don't know, I will see it on the post backtest analysis, but you see some later entries like this maybe on 5 minutes, yeah, because I'm sure we had really nice breaks here on 5 minutes. So something like this, break on 5 minutes. This is a zone on 5 minutes, hidden zone, clear mitigation, and now we have a move to the upside, which actually survived this liquidity grab. And even this move is much better on 5 minutes. So you see, when the market created already accumulation, first 3 accumulations here, now it's ready for a markup, yeah, because how the market usually likes to move is that it creates a build up and then pops to the upside, or like a build up, small reaccumulation, and pops to the upside, something that we will also discuss a bit later. And here, so you mixed like fixed management and trailing management. It's fine to do, just have rules for that. But what I would recommend for simplified backtesting is probably not using any trails or anything like that. So just put, and also pick a fixed price. Again, take profits based on liquidity are harder, yeah, so we need to make things real simple. So just pick 4R or 5R every time and just don't think about it, yeah, or you can pick like 6, but what I would recommend like 4 or 5 for your next backtesting session, yeah. And then later you can work on your management, like you can bring in a trailing management if you want, or you can mix them up, but for now it would be better to have a fixed profit target, in my opinion. And now tell me, where was the best entry? So of course probably you will not have an entry on 5 minutes, and this could be a different confirmation, like a tap into 15 minutes route and then just buy stop this candle on 15 minutes. Maybe this time frame was the only one for entries, but it is sometimes that higher time frames present better entries than lower time frames, and sometimes lower time frames present better entries. But in this specific situation, you see what happened here. So how many times you could have a loss? You could buy here, you could buy here, you could buy here, here, and like all the moves here. And then eventually later, the market really created this clean move. Maybe even this one was cleaner on 5 minutes, but it happened a bit later after this down move. And what is the difference between this place and this place? Where is the preceding move? So you need to take this into consideration. This is built up preceding the setup, and this is just a market that is moving down. So this is really a big difference. So your next question was about MFE. So it's a bit discretional and it can be recorded in many ways. So for instance, when I'm testing trailing stop loss, yeah, for instance, I'm trailing with confident breaks. So for me, the stop loss would be trailed to here and I will be stopped out here. And then later when the price develops, I just see how the price goes and I say, okay, if I have a bit more room to breathe, then this trade ran to this R. If I maybe like trailed with protection above the second low, so like this, it would survive. So you can record as many details as you want. But for this kind of fixed profit targets, you can just say, okay, I will like a reasonable, a reasonable MFE. So for instance, if this price will now just break to the upside for 5 hour more, then maybe it makes sense to record it. But if this price will do this and then breaks to the downside and then to the upside, then what are the chances that you in the real life, if you have this kind of trading style, will hold this? For me, there is basically no chance. Yeah, so I'm usually tending to record MFE of an like 1, 2, or 3 impulses, on some time frames. So again, it's discretional. Right now, you did great job, so that's fine. Yeah, so then you are mentioning about this trade was unexpectedly good, but why? Actually, this is what you expected. You had some bullish build-ups on 1 hour, you had some zones, and you had your attempts and it worked out. So this is exactly what you're expecting from your trades. This is exactly what you're expecting. I mean, of course, it's sometimes it's useful to expect a loser, a break even, just to keep your mind better. But I mean, overall, in the long run, of course, we expect these trades, these setups to work out and give us our profits. So as for the root of the moves, so yes, definitely this is the root of the move. And then sometimes later you will say like this is the root, and or maybe this is the root. But the root of the move is always like 1, and then everything you do later is just a refinement. And here pay attention how the price mitigated this, so almost mitigated this root or this bigger zone if you want to have it, like from fractal perspective from different time frames. So then you have this interesting thing about trading more. So trading that you would like to have more trades. Again, is it really about having more trades, or what is the goal of this? The goal of this is to earn money. Yeah, so you kind of don't want to you don't really want to have more trades. What you are saying here is that I want more profit. Yeah, because like if my win rate is pretty low and I basically need more trades and then I will have more profits. Yeah, but this is something for you to think about. In my experience, in my trading and in experience of several traders I know that are trading really profitably and nice, they actually trade much less than beginners. Yeah, they have less trades but really high quality ones, and they have their profits. So again, think really well if you really want like to trade because you want to trade more, or you want to have more profits. Because if you want to have more profits, then maybe the answer is not the quantity of the trades, not their numbers, but their quality. Yeah, and if you had less trades on this part of time, then you can use more pairs, or you can just accept the fact that the markets are moving in the way. So if you are trading one instrument only, then of course you will have less trades, or you will have more trades and then more commissions, more losses, and so on. So again, this is a much deeper question, but just a small detail. The markets are moving in the way that they are moving, and we can have some number of trades, we can have some moves, but then there are days and weeks that we will not have a trade. So this is the reality. So of course there are some strategies that have more trades and you can look for them, but believe me, in most cases it will not change it. So again, less trades, good quality, and you will have your profits. Again, you don't need to have really big RR numbers. You basically need 2 hours a week, or maybe even 1 hour a week, but consistently, and that's all you need, because trading is scalable. Yeah, this is the main part. You don't need to have big numbers of percentage or big numbers of RR. You need to have a bigger capital, and then you will have less trades, less profit in R, in risk to reward, but more profit in actual money. So think about it. Again, this candle, so you mentioned like it shows a bit of bullishness. I mean, work with your terminology. Yeah, I mean, for me, it's not a bit of bullishness. It's just a fractal break of structure, and that's all, basically. If you want to have bullishness, again, refer to what we have discussed in the beginning. This is not bullishness. This is complete and direct bearishness. And if you want to have bullishness, you need ideally some kind of accumulation and then break up and break up. This is some kind of a bullishness. Or let's say the market wants to react like really impulsively to the upside, maybe this and then this. So maybe this is bullishness, or even this is bullishness, but one candle is not bullishness at all, even if we are in the zone. And by the way, overall, as for this idea, I really like it. Yeah, so you have bullish higher time frame zone, the price came here, it showed some stoppage in the price, and now made a move even higher, and now made a move lower. So can it work? Yes, and it is a good idea. But also we have different scenarios in our mind. So the scenario that the accumulation can just continue. So there is no big deal that it is going down, especially given the fact that this is just a first shift of structure to the upside, and it can just continue. So that's fine. Again, here you are mentioning these equal lows. Yes, they are there, but I mean, and here are the equal highs. Yeah, and here are the equal highs. I mean, there are so many of them that you are just confusing yourself. So really, for now, I would just take it out completely. And for me, the reason why the market is moving down here is probably when you will shift to 15 minutes, you will see that you have this zone. And again, the market is still in the overall bearish move. So what the market did here is completed a break of structure, then showed a redistribution and continued to the downside. Is it natural? Yes, the market is moving in this way. Is it still a good idea to look for buys here? Yes, because we are in the higher time frame zone, and now we had an idea for bullishness from here and it just failed. But I mean, Of course, there could be some other consideration from higher time frame. Maybe the market wants to reaccumulate here and so make a move to the downside, but it does not make this move to the downside because of some equal lows or anything like that. I mean, mainly, yeah, it can have this move because mainly the market can perform this model of price action, model of reaccumulation, yeah, that the market after the move to the downside, it makes upside makes a move to the downside for reaccumulation. But again, it never has to be so exact for this to go and take something out. It already takes a lot of liquidity out on the move to the downside. Every kind of internal low and internal high, it's all work that is done with the orders, with the liquidity for the smart money, yeah, for the composite man to go even higher than. So this is the preparational work. Of course, there are more details for it, but for now, let's stop on this. Yeah, so this is what I was talking about. You have this zone on 15 minutes. Is it possible when you were looking for entries on 5 minutes just to say, okay, my 5 minutes are looking nice, but actually my 15 minutes are completely against me? Of course, we are, even if we don't consider this as a break, so let's consider it as a one range. Yes, we are structurally in one range, but then we developed so much internal structure that now, because of this specific break, because of this specific zone that could be mitigated and could see a reaction to continue to the downside, is it a good context? Not so good. Yes, it's possible to make an attempt for an early entry, but keeping in mind that this is the early entry. And as I said before, this kind of entry would be much better. Yeah, so let's also quickly discuss this kind of thing. So you say we have a break of structure, change of character. Yes, we have. But what is the overall structure? What are the overall waves? Yeah, are they moving up or down? Of course, they are moving down. We have a change of character here. So sorry. For me, it's just internal or fractal breaks or just break of structure. We have this break, and what happens next? We have this break. What happens next? First expectation in this. So I'm not trying to tell you not to trade this, but I want you to have more wide perspective on the overall scenarios that can happen and what is the probability. The market is overall moving down here. So what is the probability? Maybe it makes sense to wait until this, or if it will break higher time frame zones, then maybe to switch buys. But again, this is why it can be so difficult. Yeah, you need more experience, and this is exactly what you are doing now, gaining experience. Oh yeah, so the root of this move is this big root of the move. Yeah, you see. So this is a more specific example. So why this the root? Because this is a pullback before the up move. Yeah. Again, you're mentioning like breaker block or something like that. Just make things even simpler for simplified backtesting. So you only know one thing, that the price is overall moving up, and then work with the patterns. Yeah, so this trade, for instance, so we see a hidden S&D, it worked out, and we see a fractal break of structure here, maybe on 5 minutes. So this is just a trade missed. This is something that you will work with your post backtest analysis, yeah, and see what can be done different, what was going on. Oh yeah, and here you mentioned like this move didn't take any liquidity, but again, first of all, the market took enormous amount of liquidity on the way down. Yeah, so liquidity is not taken in one obvious move. It is taken in many moves. And even here, is this not liquidity? Is this not liquidity below this low? And even here, is this not liquidity? The market took a big number of liquidity here. So yeah, this is not the way that will help you.
Tell me back.
As for the markup of this zone, again, pay attention that this specific zone is mitigated. Why? Because the price went up and down. So this is mitigated. And then you need to either consider this bigger zone, which is unmitigated, or this hidden one, which will, I don't know, maybe will give you confirmation or maybe not. But the last unmitigated zone is basically this one, which is which is nice because it is a part of this chain. What chain? This, or maybe some unmitigated parts of this candle. Yeah, so I really like how here you expected this break, and when the price started to be rangy, you just say, okay, it's rangy, and basically for me, that means nothing because I'm working with this specific idea. So this was a good move. Yeah, and by the way, you're saying you have two candles, and that is not for me. That is not good enough for you. That's fine. I just want to tell you this, that when the market is performing accumulation or distribution, in some really often, at some time, it will start something like this. So something like this, and then create this move. So it will happen really often. And what I call this, and again, I mentioned it in backtesting videos, in the course, in the context videos, is this is a wave-like, calm wave-like structure, yeah? Or in the terms of Wyckoff, this is a build up before the markup. So that's why for me, when I see something like this creates, these points are really nice entries. Because I know that we already went through this back and forth, and now we are slowly like crawling up, and so building up before the markup or markdown move. So that's why for me, small but clear impulses like this are better compared to big and clear impulses like this, because these are relatively overextended now. And I noticed from my practice that these kind of impulses, they tend to fail. But instead, small and calm, not so obvious moves, either based on internal structure, so this is internal structure, but really clear, or even fractal ones sometimes, it works really well. So this is something specific to take in your consideration. This is also really interesting detail. Yeah, and as you can see, you have these fractal shifts of structure like this, mitigation. And again, this is why it will be so important to do an analysis then afterwards in hindsight, yeah, to try to see this move. So you have a move, unmitigated zone, mitigation. You have a chain that is building itself up and makes a mark up on the fractal structure. So what do you think is happening here on 1 minute? This is happening. And then a mitigation of this zone. So you see how this chain is created inside these wicks. There are down, up, down, up, down, up, and then pop, mitigation. Small clear wave, mitigation of this root of the move, and then impulsive move. So for me, my first expectation would be this, and my second expectation would be reaccumulation in this second zone. So you have this first zone and second zone, for instance. And then third expectation, of course, is to hold this move. But it would be great to see something like this.
Have this one here, we have...
Yeah, and I really like this zone, the choice of this zone. Unfortunately, it didn't come back to the zone for mitigation. And yes, this is sometimes what will happen. You will miss the moves. But again, what is the nature of this move? The nature of this move is that we created the up push from the zone. Probably it's a high time frame zone. Again, I don't know now. Mitigated this zone, creating reaccumulation, and then started a fractal build up. So this was a possibility for entry, I guess. But you need to understand these kind of models as well. Yeah, and so and this is the place where I decided to record this initial my rant on liquidity. And again, sorry if I sounded harsh at any time. I didn't intend to, and I still make the same mistakes because it's really hard in the live market, yeah, to sometimes to predict this kind of moves. But this is how you learn. You actually see what the market is doing. So here you mentioned, and by the way, you actually see what the market is doing and not just going to the next backtest, just doing the same mistakes. Yeah, you try to understand what is going wrong. And here you say, oh, it didn't went back to 50%. Now it moved so much up, it needs to take something out. Yeah, so but it does not need to. It already created accumulation and now it's moving up. So when the market is moving up, our expectation is the continuation, especially in the market like this. So this is the best markets for the following up of the move of the smart money. We know that they are already moving up after this accumulation, so we need to continue. Of course, we understand that there is a model of reaccumulation, but remember what I said. It can happen after sometimes after 2, sometimes after 3, but market also can go for 5, 7, 8, 10 consecutive breaks of structure before making only one shift to the downside and then continue even higher. So when the market is moving, then the market is moving. It does not need to take any lows, any liquidity, any 50% or anything like that. So come back to this place and see for your own eyes how the market is moving. Yeah, see how it mitigates this route, how it mitigates this route, and so on. So I'm not saying these were exact entries, because for me now, of course, I also, after this break, I would ideally have one reaccumulation pattern, but it does not need to happen. So here you marked up the route of the move. Yeah, so this is the route of the move, but the problem with for this move, but the problem with this is that we had one new pullback and one new structural break to the upside. Then we had this high. So we created fractal reaccumulation, went below this low, and then went above this high. So now after reaccumulation happened, and we had like 1, 2 shifts to the upside, so this was like the third. Now on this specific time frame, it does not make sense basically to watch for this zone, maybe from 1 hour perspective, but just a small notice on this. So now after reaccumulation, maybe this zone would be a better choice. And then if this breaks, then maybe we'll see even lower. But and pay attention what happened here. So the market, so I wonder if it went above this one. Probably no, but it went above this one, mitigated it, and then went up. So again, this is a bit for the future, but when you see something like this we can call it S&D 2.0s. They tend to be a good areas for reaccumulation. So this is exactly what happened here. You had a zone and the market reaccumulated in this zone. So yes, here you mentioned about the liquidity that likes to be taken out. Definitely it's true, but very limited. Yeah, for a very limited time and only in some cases. Because here you also had a liquidity, but here you also had a liquidity, and so on. Here you have a liquidity. Yeah, and then in the end you mentioned your like main pain. Yeah, like you are marking things up, but the price does not react to them. Well, this is how the market moves. Pay attention to what you are marking up. You are marking up extremes. So you are marking up the zones that are in the bottom of the impulses. Is it good? Actually, yes, because then you will have a lot less losers and so on. But remember what we discussed during the first session. The market does not move like this. They move like this in some cases. Okay? And now you are telling basically why the market does not come to my zone. it sounds like you are requesting from the market yet to come to the zone, but it's not as simple as is. If you mark up the extreme zones and even their refinements, then you need to be prepared to miss a lot of moves. Yeah, you will be missing a lot of moves like this. But again, what does this move mitigate? We have this bigger zone. So we have this bigger fractal zone. So this is why the markets are so complex. Yes, you have this zone, but you also have this one, and you have this one, bigger one, on the bigger down move before this up move. So that's why we discuss different ways of viewing the structure and the zones. These are all details that matter. So was it possible to enter this move? So if you're looking for something like this, maybe this was a 5-minute shift here, or shift here and maybe entry here. So we don't know, and that's why you will need to do your post backtest analysis. So you don't need to stop on this first step, and you need to take one step further and then look back on the price action and how it developed based on your strategy. Yeah. So now let's do a conclusion. Again, I hope I didn't sound too bad at some times, but these are all important things. So now let's quickly do a conclusion. So first, equal highs, liquidity, don't overcomplicate it too much. In fact, just get rid of these concepts for some time, and you will see how much easier things will become, because then you will see a market that is moving up and you will follow it, and that's all, knowing that the market does not need to come back to them. Then pay attention that some of your ideas were inside. So you had like, so maybe let's make it green. So you had a bullish idea on 5 minutes, but then you kind of forgot that your 15 minutes, your middle time frames are against you. So you need to have some supportive bias from your middle time frames, and remember that later entries are usually better entries. Yeah, when the market is already moving up. Then decide for your management. So either use, so for your next backtesting, I would really recommend using fixed price, fixed profit target of 4 or 5, and that's all. Then use major Forex pairs, for example, for your next backtesting. They are easier than minors and crosses and exotics. Take into consideration that small clean moves in the model of accumulation, in the stage of build up, these kind of moves are even better than this kind of moves. Actually, overextended moves, relatively overextended moves, is the sign of a bad quality of trades, and we know that they tend to be liquidated. Kind of because they are so obvious, and I think so. I don't know the reason, but just for me, I can explain it with the fact that it is so obvious. Then there will be so many liquidity here that it just will be taken out. So again, sometimes there can be a good context for liquidity grab, but sometimes there is no good context for liquidity grab. So again, the same thing goes for equal lows, equal highs, 50%. The price does not need to come back. Price can mitigate different zones. So for instance, you are expecting the price to come back to this 50% or maybe to this refined zone, but what the price can do is it will mitigate this fractal bigger zone and then give you some confirmations for the entry. So what you can do is actually see what the price will do and enter, for instance, more aggressively. Yeah, so this is a conclusion. I hope it was useful. Send me your questions, and let's do 5 or 10 more trades, more in the same way, but taking into consideration what I said, and maybe rewatch some latest videos on my backtesting and live trade examples where I say very good context or good week or something, you will find good examples of trades there. And now let's do the second part, which is post backtest analysis. So you can see an example of post backtest analysis on my USD CAD. You can do it yourself. I will do it with this pair. You can do it yourself as well with this pair or with your next analysis. And it basically includes just going back before your backtest, so knowing what will happen, and working like a mix of hindsight, a mix of backtesting again, and just seeing where you could do better and where you missed, why, and so on. So I will, this part I will make it shorter just to save time, because again, you can see a good example of post backtest analysis on USD CAD in the backtesting section, but this is approximately what you will need to do. But basically you need to answer questions like this. How could I avoid losers? How could I make my winners better if you are using trailing stop loss, for instance, or just record, or basically, yeah, maybe make them better in other ways, maybe like moving to break even earlier or later. And then how could where I missed trades. Yeah, so these three questions already will give you a good base for this post backtest analysis. And here you had this trade and something here. Let's just, again, I will make it shorter, just rewatch USD CAD, and then you try to understand what the price did overall. And we can see that we had this weekly push or a daily two impulses. Basically, we can count this as a not a structural break. This is clear, just a shallow break, liquidity grab. And then this part then could be treated as a reaccumulation from our two breaks structure. And so this part could be treated like this one. And let's see what you had here on 1 hour. So you started to look for bullishness from these 1 hour breaks, which so the structurally 1 hour was broken, but this up push maybe from, so let's just quickly understand what the price did here. So the price created this range, and what it did is held the inside structure from 4 hours. So we have this move on 4 hours coming back, and we held this one. Yeah. And before that, the price created this huge down push on 4 hours, and then started to create inside structure shifts once, twice, created a reaccumulation on internal basis, mitigated this refined zone, and then started to build this up move on 4 hours. Again, up move, creating this internal low, mitigating lower, build up, move up, overall holding it, this internal move up and holding it again. So this was a long build up, which we will not now discuss. But then let's see if we could avoid the first loser. So this is the first question you need to ask yourself, because definitely if you avoid losers, you can count them as profits, and definitely this one could be avoided. So I discussed this in the beginning or in the analysis section of your video, but what we have here is a structure that is not even building up. So this is a really early attempt. Yes, and if you couple it with the fact that 1 hour is pretty rangy at the moment, so this one is not a good entry. If you had an entry something like this, so you had this 1 hour, or even imagine it even deeper, and then here in this zone from a really bullish market, you have an entry like this with internal shift, then that's fine. But in that current condition, then it's not that good. And for this winner, what we can see that this one should be a break even. So because of this manipulation, any kind of entry would not be that good. This entry would probably be even nicer. And then we have this move and this move, of course. So later entries are usually better entries. Then when the wave started on 5 minutes, basically I don't see anything except maybe fractal structure buying it on the breaks. But for me, there is nothing except maybe of this move. But again, even for me, even though I'm not expecting any kind of deep pullbacks when the market is running, this would not be an entry. This one maybe, so we have a deep pullback, then this shallow break, but again, I don't like the break. So for me, this wave was on the possibility to enter here, and then this one is missed. Again, later when you will have more complex backtesting, you will analyze how you could enter against your main bias, but for now, let's just skip it. So maybe there was some shorts possibility, but again, you see how shorts were developing. It could take some, could give you some entries, but then maybe if your entry is here, it would be a break even. Then again, some entries, but it never runs a big distance. Instead, price made an interesting move here. So let me delete everything here. It created a push on 30 minutes, this shallow push here, and a really clear move on 30 minutes. First giving you maybe this entry possibility for a loser, and then doing what? Mitigating this, mitigating deeper zone. So this is how reaccumulations look like. We don't need to go all the way here for liquidity, but we have some structural shifts. And maybe this could be an entry, or after 2 shifts to the upside, this late entry could be found here. So again, go watch it yourself, go to 5 minutes and understand that maybe something here. So again, this kind of entry reminds this build up. As you can see, you have a build up and then a mark up, build up and the mark up. Yes, I would also expect this one to be deeper, so no entry possibility there. And probably after this break, you could be more confident, more aggressive with the buys in this zone. Why? Because you understand that here you created reaccumulation and now you kind of reset the count of consecutive breaks. Now you can follow the market for a new push to the upside. And let's look on 1 hour. Yeah, so on 1 hour, it creates this really classic pattern of reaccumulation. So we have accumulation, markup, break, break, 1 break to the downside for this clear, like extremely clear zone. Yeah, so this is a time where you needed to check higher time frames more frequently to understand what is going on and if you can be involved here. And then you would have maybe early entry here, and then this shift and this shift. So these points are really nice context points for entries, because they happened after the break up and confirmation of accumulation. They happened after reaccumulation after the break. So this is second point. And now after reaccumulation, you had this supportive move to the upside. So these kind of points are real well. And then you have mitigation of a higher zone. So go back, analyze how the price moved. Again, this was a quick analysis. Refer to my USD CAD analysis for more information. Okay, that's it. See you in the chat, send me your questions, and I hope it was useful in some way.